Hi, everybody. Sorry, a little late today. Our building was selected for a random fire inspection, safety, fire safety inspection today. So I had to um, hold off getting this started so that I can let them do their job. So, anyways, I'm so excited though because today this is a good discussion. So, do you want to increase your net profit by 10%? Because I have an exercise that we're going to work on today that's going to help you do just that. Hi, everybody. Thanks for joining me. My name is Kelley Brubaker. I'm a CPA and a business coach. My firm is Profit Scale Thrive, where we guide attorneys to overflowing profits, scaled growth, and thriving lives. I've been serving law firms for over a decade, which is how I know exactly how to fix your struggles. Okay, so in addition to being a business coach and a CPA, I'm also a mastery level certified profit first professional. So, what does that even mean? Well, it means that I love the book Profit First, written by Mike Michalowicz, so much that I've gone through the training program that supports the book so that I can spread the message to business owners everywhere. I completed the certification program. I maintain my membership and continuing education in the Profit First Professionals program, and I actively participate in the members only mastermind level activities. My coaching program, Profit Surge, is based on the book Profit First, where we dedicate time in the program to working on expenses. And I think one of the most common objections I hear when I talk about my coaching program is around expenses. The presumption is that I'm going to make my clients cut all of their expenses to the bare bones in order to increase their profits. But honestly, that's the furthest from the truth. So the typical profit and loss statement shows every business owner that sales minus expenses equals profit. And unfortunately, too many business owners fall into the trap of believing that profit is just what's left over at the end of the year. But that's not what Profit First teaches. What if I can show you how to easily manage your expenses? And typically, the first time I do this with my clients, they're able to cut total expenses by 10%. So just think about if your total expenses are 100,000 a year, 10% of that's 10 grand. Are you in? So let's talk about how to do an expense analysis. I know it sounds a little bit fancy, but it's not. And you can grab a printed summary of what I'm about to explain in the description below. To get started, you will need all of your business transactions for the last 12 months. Personally, I like to grab the account history from QuickBooks or whatever your bookkeeping program is to focus on the last 12 months of transactions for all bank accounts, checking accounts, savings accounts, and be sure to include all of your credit cards too. This source is only going to work if all of your bookkeeping is up to date and all of your accounts are reconciled. The reason I like doing it this way is because I can quickly sort the report by vendor name to easily see the amount paid by vendor for 12 months. And I can also resort it by expense type to see the different vendors in the same expense category. But if you're unsure about the completeness of your data, you're going to need to go to your original statements from your bank for each account, checking, savings, and your credit cards. So once you have all your transactions, review them individually and mark each one as P for profit generating, R for potentially replaceable, or U for unnecessary for your business. Okay, not unnecessary in life, and we'll talk about that in a second, but unnecessary in your business. Literally, this decision is, does this transaction generate a profit for your business? Good, we're good. Potentially replaceable, that's an R, but completely unnecessary for your business. If this thing is not generating a revenue for your business, it's done with your business. Okay, you're not paying it with business money anymore. So notice that when I said how to mark them, PRU, the amount of the expense is not a factor. Don't even worry about how much you're paying. Just what are you paying? Why are you paying it is the purpose. Okay. To quote Maverick, because I'm an 80s girl. I love pop culture. Quote Maverick here, don't think, just do. And to be honest with yourself, if there are personal expenses you're charging through your business as your version of a tax management plan, that's a whole other discussion. I'm happy to have that, but we just need to focus on getting your business healthy. So the idea is to protect the P's because these are expenses that create money for your business. I commonly see merchant service fees and domain hosting fees. You need to make it easy and fast for clients to pay you. So keep the merchant service fees, and you need your website and your email running smoothly, right? So you need to keep your domain hosting fees. Now I'm going to skip over ours for a moment. Use. We're going to eliminate the use because they're not supporting your business. Common items that are labeled as a U are your gym membership, Spotify for your car, non-business lunches. Please be honest with yourself on this. I know most business owners feel that Uncle Sam is out to screw you, but if you want a healthy firm that is prime and ready to grow, you need to be honest with yourself here. Using business money to pay for your personal expenses is making your financial reports muddy. And truth be told, the taxpayers I know who are worth their salt are going to save your butt and not deduct these things on your tax return anyways. They're going to recode them to owner's draw or distributions. So just save yourself the headache. Let's get clean financials that actually support your business. Please know, I'm not telling you that you have to cancel these expenses. I'm just telling you, do not pay them with business money. Do not muck up your business reports. Okay, so we've eliminated your P's, we've eliminated your U's. Now let's focus on the R's. So, and I think I mentioned that they would be replaceable, but R would also be for renegotiating, because I don't think renegotiable is a word. But what I see in this category is stuff like IT invoices. When you're billed by the number of workstations or the number of active email addresses, what about domain names you've acquired over the years and you've done nothing with them? Also in this category is software that you no longer use, but you're paying a monthly subscription for, or you use it, but it started at this really low promo rate that might have even been free, and now it has tripled. So take your time going through the R's and be realistic. I'm not suggesting you cut something in this category just to save money. That is not my intention. What I tell all clients is you should have the proper expenses for your business. And by proper, meaning each and every expense generates money for your firm. For example, make sure you have an adequate printer. If you print a ton of paper, have a fast scanner if you have a lot of documents to scan on a routine basis, or a proper chair, because we all know how much we sit at our desk all day, that will save you the time and money spent on chiropractic appointments and pain med. So this is not willy-nilly, let's cut all your expenses. Let's create an environment where you have proper expenses in your business. So for the R's, go and get the original invoice and review it. For example, with the IT workstations, IT invoices that you pay by the workstation. It's as simple as looking at the invoice, how many workstations are you being billed for, and then walk around your office. Do you actually have that many workstations actively being used? If you have turnover, it's very possible that you're still paying for a workstation or two for people who aren't actively using it. So go back and update with your IT people. They don't know. They just know that they're servicing that laptop. They don't realize that just because there's no issues reported, it's because nobody's using it. So if you have something, so for this example with the IT, if you walk around and you're being billed for 10 workstations and you have 10 workstations actively being used, then you're done with it. You're done with this item. So go on to the next one. But if it's wrong, you're being billed for 10 workstations, but you're only really using 8, then check in with your IT person and just get your bill updated. And that's going to save you money going forward. Another example, are you renting more office space than you're actually using? So I know this one's not going to be an immediate reduction in expenses, but review your lease, consider subletting, or talking to your landlord about downsizing your space if possible. And then here's my favorite, because we all have them. I do, believe me, I do this exercise once a quarter. I always find something. So there's software as a service, which are your MailChimp fees and Canva if you do Canva Pro. So there's monthly subscriptions that you signed up for, maybe even on a free basis. And now you're paying $9 a month, and it's 2 years later and you don't even use the software. So $9 a month doesn't sound bad, but $9 a month for 2 years, that adds up. So if it's software that you still use, we're going to talk about it in a second. Let's do it this way. If you still use it, if you do not use it, cancel it. If you do use it, here's another set of questions. Are you on the correct subscription level? Because many times software has 3 options. There's usually I just classify them this way because they come up with fancy names and I don't know. It's like going to Starbucks. But usually they have a gold, silver, and bronze package. Trials are usually for the gold level. And the gold level is everything because they want you to fall in love with all the bells and whistles. And honestly, a majority of users typically, and I'm not saying you're typical, I'm just saying on average, most people will fall into the silver or bronze level. So all I'm saying with this point is review the levels, review the features for the level that you're currently paying for. And if you're not using the premium features, downgrade to an appropriate level. Or here's a better one. Do you pay for 2 different software subscriptions that do the same thing? And the most common example I see here is paying for Zoom when you already have Google Meet or Microsoft Teams included with your email service. So I'm going to be real here. I know saving $10 a month on one software subscription doesn't seem a lot, but that's $120 a year. And if you have 10 subscriptions you can do this with, that's $1,200 a year. And then add that to the other excess you've found. And now you're talking about serious money you just found in your business. And it's money already in your business. It's already yours. So here's the thing. Be sure to keep a running list of the savings you find. And when you're done with this exercise, come back here and comment on this post how much you were able to save, either as a dollar amount per month or per year or as a percentage of your revenue. And add this activity to your to-do list a few times a year. I do it every quarter. It's crazy how fast expenses will creep up on you. And honestly, I call this the ADHD tax. It's the tax you owe for not paying better attention. And yes, I still use 12 months of expenses every time because it gives me a reference point when I'm looking at the amounts by vendor. And lastly, don't forget, profit's something you plan for in the beginning, not as an added-on bonus at the end. And if you need support with this, please feel free to comment or DM me with the word expenses, and we can schedule time to talk about how we might be able to support you. Also, if you know an attorney who might need to hear this information, please share this video with them or tag them below. And have an amazing Wednesday. Bye.